Hello, everybody. It's Rombo here, and continuing with my indicator series. I'm going to be going over the Wolfe wedge today. I have talked about it before, but never really kind of highlighted it. And today we're going to be looking at what it is and what it does, and how you could use it. Uh, so let's just dig right into it. First of all, well, I'll give you a little wedge education, I guess, here. Typically, if you have a wedge, and I talked about this before, if the pattern is going down, the arrow is pointing down, that indicates an upward move, and vice versa on the downward wedge. It's neighbor Dave. It will then continue. It will reverse and go upwards. So now, with that said, there are certain rules to the Wolfe wedge. You want the pattern to start just like this. Here's a bullish, bearish one right here. Okay, this is a pretty good one. What the indicator finds is this wedge pattern. Okay, this is called the first wave, the second wave, the third wave. Then the indicator senses a wedge pattern, and then we'll put this on your chart. Okay, and then the fourth wave, which is interesting because if I see a fourth wave starting, that pretty much tells me, even though this is a bearish pattern, sometimes I'll scalp this because a lot of the times it goes at least to the top of the at the wedge. So you could play that pattern right there, right? But now, as far as how the pattern goes, it's supposed to break the wedge, which this does. The indicator also gives you an ignition candle to where to get in. So now this is a bearish pattern, so you sell right here. It also gives you automatically a stop loss price, and then boom, it comes down. Now it automatically draws this line for you. This line that's starting from point 1 to point 4 is a target price. Isn't that nice? And it even gets better. The end of the wedge is your time frame of when it should hit the target price. So not only does it give you a target price, it gives you when it should hit. Kind of slick, isn't it? Now, this one didn't quite get down to the target price, but I mean, that's awfully good. I mean, that is awfully good. Now, like I said before, you want there's certain rules. I might as well tell them to you here on the bullish pattern. You generally, on this fourth wave up, you want to see nothing but blue. You don't want any red. Okay, that's one rule. Or if you do have just a little bit, like one candle here, one candle there, you don't want to see a lot of back and forth, because that will cause resistance as it's coming down. So that's one. Another rule is that wave, the second wave, and the fourth wave, you want to be close to parallel, which this is. So that's another rule. The next rule is it has to break this wedge. All right, it has to come up. It's the rubber binder effect. Farther this stretches up, farther it's going to go down. Okay, so that's another rule. Another rule is if this comes way up here like this, let's say, before it starts coming down, see how much time left you have? You don't want that. That's not enough time for it to reach the target price. So then I wouldn't accept that either to use. Another rule is if it comes up here and then you get an ignition candle right here in the middle of the wedge and starts coming down, I wouldn't take that, because you only want to take a position using this indicator if it matches all of your all of the rules. Okay, like right here. Okay, this is not a wedge, that's more of a channel. Even though it does register that, it gives you all the information that looks nice and parallel. It doesn't break the wedge, and here's your ignition candle right here. And you know, it had a pretty good good rip down, but didn't get near the target price here. So you're going to get a lot of, when you use this indicator, you're going to get a lot of patterns, okay? But you have to be disciplined, and you have to just sift through them until you see a really, just like this, a completed pattern. The waves are parallel, it breaks the wedge, and you have at least 1/3 of the wedge left to be able to somewhat trust that wedge. And it's still not guaranteed, but it is very accurate, around 60-65% of the time when all the rules, it follows all the rules. So this is a bearish pattern on FLIC. And if you notice, it got very close to hitting this one. It didn't get close here, but it's still somewhat worked out for you. You could have made money on that one. So that is one example of the bearish. And then you have the bullish also. Now the bullish looks for, here's the downward wedge where it's going down like this, and it gives you the wedge pattern that breaks upward. And here is a pretty okay example right here. I would say we have parallel lines. We have some blue in here that you don't necessarily care about, but not a lot of time left, right? Not too much time left. It did break the wedge, but barely. You want to see it a little bit farther down. But if you do notice, it did hit its target price right here. So it did work. And here's another one for me. Now this line is coming way out here. Not that good. And you have a lot of blue in here, so I wouldn't trust this one either. This is an example of a bullish wedge. We also have, let's see if I can find another one here. I think TNP was another one. Oh, this isn't working out here. Okay, here's TNP. Another wedge right here. There's quite a few of them here. 1, 2, 3, 4 on this one. It loves TNP. This is an example of a bearish one. Look how short it is. Look at how the waves, the fifth wave doesn't come up above the wedge. And still, even though you had the ignition right here, it's still here its target price right here. So sometimes they do work, but I do not. You want to be consistent. You want to be disciplined. And you only want to take the patterns that fit all the rules. That's going to give you the most reliable outcomes here. Here's another example of a bullish pattern. The wedge isn't completed. There's a gap here. The ignition happens after the wedge. It still does hit its target price though, but I don't pay attention to those. You have to be disciplined, guys. Here's one. The wedge doesn't quite finish, but um, it is still relatively decent. You had one blue candle in here, somewhat parallel. Plenty of time left. Uh, it did come below the wedge here. So you had your ignition candle right here, which I don't like. You want your ignition candle down right about the bottom of the wedge. Typically, you don't buy in here. You buy as it breaks the bottom of the wedge. And that's usually where you get your ignition candle from. And then boom, it got near the target price right there. Had a retracement if you stayed in it, and look at that move. It definitely hit its target price. Um, and wedges sometimes fit together. You'll see that a lot, especially where there's a lot of volatility going on. Here's a bearish one and a bullish, and then here you have a bullish one, and at the same time you get a bearish one. And this is a really good one. This is uh, a good bearish wedge right here. The fourth wave sets up what I call the trap. So this is a bullish or a bearish wedge. So this is a bull trap. It's setting up the bulls, comes way up here, and boom. And it's got a target price down here at 752 or so. So we'll see what happens with TNP here and see what happens if it comes down here. That's quite dramatic. But that is an example also. Again, with the bullish pattern, like I said, the fourth wave, this is a bear trap. So the bears get all excited, and then that's the rip upward, forcing the bears to cover. So that is another example that this indicator finds. Let's see, another one is TPST. I have that up here because now remember, with this indicator, it does come with a scanner. And you could put the indicator on the minute chart, the 15-minute chart, the daily chart. So it works with all your times, and it has a scanner. So then you could scan for these on whatever you want. I like it on the daily chart. And then, like today on Saturday mornings, I'll bring up my Wolfe wedge scanner, and I just sift through these. And here's one that I just found today. It has a really nice, a really decent looking wedge, guys. This is looking really nice. It is the candle is now below the wedge. Now you want to wait for it to finish. Remember, this moves as the price moves. So we could have, we could have another reddish candle and another one yet, and so then number five, will just continue to draw this line down as the pattern continues. And then once it starts to come up, after it meets the parameter set in there, once it gets up above a certain percentage, it will draw the stop loss. This will turn into ignition candle, which I have it colored for aqua green. And then here's the target price of, on here, we have a target price of $18 and $18.10. And it finishes the wedge at December 3rd. So it not only gives you target price, but it gives you the time when it should hit. Why is that important? Well, if you do options, you can play with that, and so this one is actually very good as far as all the rules are concerned. We have plenty of time left. as long as it starts to bounce back here pretty soon, maybe Monday, Tuesday, Wednesday, if it keeps coming down here, that would be, and it starts to bounce up, you still have a lot of time with this, and boom, it will, if it goes according to what it should have a nice bounce up and hit its target price. And it also matches right now. This is looking good because of the deviations here. It came up. Now it looks like it might bounce right off of the average means price. And maybe we'll get a bounce off of that also. So there's some concurrence with other stuff that I have on my chart. So this is turning from an indicator video to a chart reading video, but this one is looking pretty good. Again, I'm not a financial consultant, so I'm just an old man in a dark bedroom looking at monitors. So, but that's the Wolfe wedge, guys. When you could go to Fun with ThinkScript and get the indicator there and the scanner. It also does come with a somewhat of a tutorial kind of PDF that shows you the rules that you want to follow that I just talked about, and just be disciplined. You see a Wolfe wedge that is just choppy. The point is way out here. It's way past. There's a lot of resistance. The waves aren't close to parallel. Be disciplined. Don't take those. It takes a lot of time. These are rare that you get a really, really good Wolfe wedge, bearish or bullish. But when you find one, usually, not all the time, again, but a lot of the times it will get near the target price and is a pretty good forward-looking indicator. I've had some good success with it. Not only has it helped me going with what it's supposed to do, but it's also saved me a lot of it saved me from losing money also, or staying into a trade. For instance, let's say you buy in right here, okay, first things first, I see a fourth wave starting. Like I said before, it sets up this wedge, especially, the bears. It seems like their patterns always work a lot more than the bullish ones, but it seems like they just let that bull trap go, and then boom. So I use their methods against them. And when I see this fourth wave starting, man, I'm telling you, I make money on that. And also, let's say you're in this and down here, and it's coming up and up, up and up, and then all of a sudden you watch it, and all of a sudden this indicator shows up, and you're like, oh wow, this is in the middle of a bull trap here, so I'm going to keep my eye on this. And, as soon as this starts coming down, I'll usually get out there, where without the indicator on here, I might just be going, oh, it's just going to come back and, maybe bounce off the first dev and come back up. But I see a target price down here like this, and I'm up here and I'm in this trade. I would get out right here, where normally sometimes I might get in here or wait. And then once it broke this deviation here, then I'd get out down here. So that saved me, a lot of money here. So it also helps you staying in trades longer, or getting out at the right time when you see when you're in it and it's going up, and it sets up this shows you that you're in a bull trap right there. So it's beneficial for many reasons when you learn how to read it. And so that's it. What I have for today, guys, with the Wolfe wedge, Wolfe wave indicator, and hope you guys are having a really good weekend. And we will be seeing you Monday for Monday Market Movers. And take care, guys.